Hey everybody, wanted to make a follow-up video for these Lucid calls that I picked up this morning and talked about in the earlier video. First, let me say that this is not investment advice. This is paper trading and for entertainment purposes only. Okay, so uh, Lucid has had a big bounce today from the pullback this morning. I picked up the January 27th $9 calls for 7 cents a contract this morning. Just sold half of those for 24 cents a contract. So over a 3-to-1 just in this trading day on these contracts, but only sold half of them. So I got the initial investment back and some profits, and then I'm able to hold the other half of the contracts through expiration on house money. So the idea here is this is the way that I'm playing Tesla earnings. We've got Tesla earnings after the bell, and if it gets a good pop, say 10, 15% here in the next couple of days, I think Lucid and the rest of the EVs will follow. Lucid could get a good move up of 20% or so up here to around 1060 to this trend line. Also, I believe the 20 weekly moving average is also right around 1050, 1060, so that would make sense. But yeah, so I'm getting to hold these, with no risk on the house, and was able to get the initial investment back and put some profits in my pocket, which is nice. So, but also, I've been watching the dollar, and just kind of as a hedge, if we go to the dollar, the DXY on the 4 hour, it's kind of been building some bullish divergence on the 4 hour. You can see, we've been going lower in price, and the momentum's been higher. So higher lows in momentum, lower lows in price. It's not the cleanest bullish divergence. When there was clean bullish divergence right here on the 4 hour, the dollar moved up just almost a 0.5%. Just in the next 4 hour candle. So, if the dollar, say, spikes up to 1%, spikes 1% up to around 102.84, I think there'd be a pretty big pullback in gold. So what I did was I picked up Barrick Gold $19 puts for this Friday for 4 cents a contract. You can see it's coming up to this trend line that I've had for quite some time. It's tapping it for the second time. You can see when it hit this trend line here the first time, there was a reaction. It sold off 4.5% that day, and then 2% that day. So 6 or 7% just in a couple of days. Or right at that trend line again. It's kind of making that double top look, and that trend line goes all the way back to looks like 2019. So August of 2019 connected to the candle here in November 2019, and then you can see there's the reactions here. That was the COVID crash, so just kind of ignore that. But some reactions. There's 1, 2, and then kind of fell below it. Then when it stayed above it, ended up going on a nice run there to the upside. Now we've broken below it. When it broke below it, it did back test, sold off quite a bit, and now we're coming right back up to it. So this trend line also kind of makes what looks to me is like a neckline for a head and shoulders pattern. So that's a topping pattern. So you've got your shoulder here, you've got the head here, and then you kind of got an extended shoulder, or it could be like a shoulder, a head, and then a shoulder. So you get your head, your left shoulder, your head, and then your right shoulder. You've got the neckline. We've broken the neckline. Now we're back testing that neckline. But kind of to be honest with you, just gold itself has that look like it's going to burn through. If you look at it, it was building some negative divergence on this move up to the upside. So it's going up in price. It was going down in momentum. So it goes to show that, divergences doesn't always mean that price is going to go down. For the most part, it does. I'd say it works probably 80% of the time. But the other 20%, there's times where you can burn through the divergence and then have these big moves up. So, like I said, gold does kind of have that look like it wants to move up a little bit more and come out and test these all-time highs for the third time. Maybe if we connect those two candles there. Maybe it comes up to this area around close to 2100. So, and if that was the case, obviously the dollar's not going to spike. I mean, it could just spike, 1%, you know, tonight or tomorrow morning, and that would cause a pullback in gold, and that would cause Barrett Gold to pull back. So what I did was I picked up $19 puts for Friday for 4 cents a contract, just kind of as a hedge for what else that I have out there as far as calls, because I did pick up a DWAC call as well. It was a $15 call for this Friday. It's only 20 cents. You can see there's what looks to be bullish divergence. So you've got the lower low in price. You've got the higher low in momentum. It's not the best one. It's kind of there on the MACD as well, but just only picked up one contract. It was just $20, so 20 cents a contract. So we'll see what happens with that. But with these Lucid calls, I did, like I said, only sell half of them. So I got the initial investment back, profits in the pocket, holding the rest on the house. But I also wanted a hedge there just in case the dollar decided to spike and play out what looks to be more bullish divergence on the 4-hour. But when it's not very clean like this, sometimes it won't play out, or it'll just have a muted bounce. And you can see on the daily, and this is also what kind of happened with gold. When gold got below the 50 RSI on the daily, it had a very hard time getting a decent bounce on any kind of divergence. So it looked like you had a little divergence here. Actually didn't make a lower low, but you just really couldn't make anything of these bounces, just small bounces, and the RSI just kind of stayed here below the 50 RSI. Like I said, that also happened in oil. If I can find oil real quick. It's another example, but this is what happens in, stocks when they go into these extended downtrends. A lot of the time when they can't get back above the 50 RSI, they just continue to move down. And you'll see that even on the indexes, that held true for quite some time during this bear market or this correction, whatever you want to call it. But you can see here on oil, once it broke below that 50 RSI level, it could not get back above, and it finally is starting to get back above. And if the dollar continues to sell off, I'd expect oil to continue to move higher. But I do think at the Fed meeting, if the dollar continues to go down, I think the Fed meeting is going to pour cold water on this rally, because the dollar moving down like this is more inflationary. And I think if the dollar continues to go down, despite what the Fed does, it'll be seen as weakness in the U.S. economy. And so bad news right now is kind of good news for the market, but there will come a time where bad news will be bad news again. I just don't think we're there yet. But like I said, just a fun hedge, some lotto tickets here on Barrett Gold, double top look, tagging my neckline, my trend line here. I do think it probably could break out and get to this yellow line here, because that line goes back to the 2015 low connected to the 2018 low. And you can see that trend line definitely holds true, because during the COVID crash, that was marked the exact bottom. Here you can see it on this candle here. So I also tagged it here as well. As soon as it tagged it here, you've got to move up of about 47%. So it goes to show how trend lines do work. Technical analysis does work. It's pretty neat there. So yeah, it could come up and tag that yellow line, and that would take it to about 2073. So I don't know. We'll see. Like I said, it's a little double top look. Kind of has some negative divergence there, even though gold itself has burned through its divergences. I'm just taking a shot here on some lottos on some Barrett Gold puts. So again, they were the January 27 $19 puts for 4 cents a contract. I'll make a follow-up video probably tomorrow, maybe the next day, just kind of see where the market's going. The market's obviously had a big bounce, and I'm really happy that I sold all my puts. I did keep a few of those NVIDIA puts, but we'll just, I sold most of them, probably three-quarters of them. So, you know, definitely got the initial investment back and made some really good profits on those, and also on the SPY puts and the coin puts. But I'm definitely glad that I did sell them when I did, because we've had a pretty big rally off the lows today. Obviously, we're back, and the SPY is green. So we'll see if it continues to go. We've got Tesla earnings after the bell, so it's going to be pretty exciting. Holding these Lucid calls on house money, just some lotto tickets there. Hopefully it can shoot up to 1050 and make a 20-1 on the remaining contracts, but we'll see. So I want to say thanks for watching, and we'll see you next time.